This is the MTPredictor weekly market update for May 5th, so happy Cinco de Mayo to everyone out there. This is actually the MTPredictor standalone version 7.5. This is our newest version, non-ninja version that works with eSignal, IQ Feed, Zenfire, Rhythmic, bar chart, FXCM, and some other data feeds. So we'll work off of this version today for the market update. So what do we know? We got the markets at all-time highs. We had the Fed meeting out of the way there last week. The Dow hit 15,000. The futures just shy of 15,000, and so the equity market's actually leading the futures markets a little bit. Usually it's the other way around. But we anticipated that we might see that $15,000 level, and we'll kind of go through these markets and see where we are and what the possibilities are. When I started as a broker back in, I think it was 96, with Schwab, one of the things that I learned early on was when interest rates are low, stocks will grow. And in fact, since 1950, when interest rates are between 2.2% and 5%, I'm sorry, below 2.2%, which they are now, since 1950, stocks have returned on average over 13%. When when inflation, we'll say inflation, interest rates are between 2.2 and 5%, stocks return about 8.5%, and then if inflation is above 5%, stocks only return about 0.5%. So you can see the tendency is, historically anyway, that when interest rates are low, stocks will grow. And I think this is what we're seeing. Interest rates now are, artificially low as the Fed is manipulating the bond market to keep those interest rates low. But we do know that the unemployment and inflation have not breached the Fed's forecasted levels, and therefore they're saying that they're going to keep these interest rates artificially low, for the next maybe couple of years. So with all that said, the upside is not that we won't have pullbacks and corrections, because markets don't move in just a single straight line. As you can see, we have pullbacks, corrections, and so forth. But I think as long as those interest rates are low, overall, the markets will continue to move higher, as we've seen over the last few years here. If we look at the Dow here on the weekly chart, I'm just going to use the Elliott wave pattern to see that we did hit a typical wave 3 target here. If we go back, so our next, let's go all the way back to the prior all-time highs. I'm going to take my decision point tool here, and you can see this level of resistance here. Let me stretch this back out. I'm going to drag this over. Okay, so this, again, there's that 15,000 level. That's a nice round number, resistance level. And then we're going to have the major decision point resistance that will start around that 15,240 area. Again, the top of that box is going to go all the way around to 16,004 and 16,375, and then 16,000 is also a significant round number, in that, if we look at the broadening formation, that 25-year pattern, that broadening formation here in the Dow, this is a topping pattern. Technically speaking, this is the trend line at the top, and you see it comes in right around 16,000. That's if the Dow does move fairly quickly into 16,000. There's the level there. Now, if it kind of goes, we go sideways here, a little bit lower, and then eventually they work its way up. Well, that line is projected out in time here, so it would be greater than 16,000 before we hit that resistance level. So right at the moment here, if the Dow came up, it would hit that resistance level around 16,000. We're not there yet. Depending on when we get there, this level will change as it's projected out in time. But you can see as when it's sold off, it's hit the trend line bottoms and rallied, and as it's hit the tops of the trend line, it's we've had some crashes, corrections, and so forth. So we'll see how that plays out. But this is an interesting area as we get up into that 16,000 level in the Dow. We're going to keep our eye out, even though if the interest rates are low. Like you said, we can expect corrections, crashes are possible still because of all the external things in the economy. So the stock market will give us a picture of how corporate earnings are doing and stuff, but that can diverge from what the actual economy is doing. So we have to kind of factor in all those things. So it'll be interesting when we get up into that, if we can get up into that 16,000 level. Again, we're going to deal with 15,000 first, and then that 15,000 and change as we hit that major. This should be a major level of resistance because it's coming off. It's a decision point coming off of the prior all-time highs. All right, so it should be a very significant area in here, especially as we can get to around that 16,000. If we do get resistance here, we can actually project down using the wave price tools here. Let's go down wave 4. Just click at 2, up to 3, and this projects our wave 4 back down around that 14,000 is the top of the wave 4 level. So if we do correct back here into wave 4, we should see support there, and then we could project wave 5 up and see where that comes in later. STF is showing strength to the upside here, so even if we do pull back, if that STF remains strong, it's telling us there may be more upside ahead, so we could anticipate a wave 5 coming in. So we'll see if it overshoots this and we get into that 15,000 plus level into the DP before we get a pullback there. Maybe we then pull back here first and then make a run for 16,000. We'll see. And let's look at the S&P here. I'll clear this off for a second. And we'll first let's look and see if the intermediate pattern here, just your ABC on the daily chart. But let's look at the weekly chart here, and just check the pattern there. Okay, the ABC that we've kind of gone beyond, and then let's go back to scrunch this up. The highs there in the S&P, and we'll take our decision point tool off of that. Gives us this level here. And actually, let's take one more level just before the highs here, this one, because this is the level that we're just coming out of right here. So we've closed last week above that area. Let's bring this over here. Okay, so we've closed above this area. The high last week, let's put my let's see, the high there of 1614.25. So if they take that number out to the upside, it would be pointing us to more upside. Okay, if we don't have any red seller's candle here, so it closed neutral. So we'll see if they can take that number out to the upside. Like I said, we should see a rally, not necessarily all the way to 1700 right away, but that is the next major decision point resistance off of the prior all-time high there in the S&P. All right, let's take a look at the NASDAQ. Here's the weekly chart of the NASDAQ, and we know about this wave 5 pattern up here. That's where the NQ had the pullback here, and then struggled in this wave 2 or B area. Eventually took that out as they took that number out that I gave you in a prior weekly market update, that if they hit that number we would see them test the wave 5 high, which they did, and then now we've gotten a close above that area, and if we take a decision point off of this prior swing high here, you can see we've just tagged the weekly decision point resistance there in the NQ. So this isn't resistance. We don't have any, trend is up obviously, but we don't have any strength on that particular strength on the trend to the upside at this point. So we'll have to watch this area. You know, Apple has been trying to come back. It got back above 400, which was kind of an important level. The next level we need to see it back above 500, and then I think you see the NQ catch up, you know, because the NQ is way behind the Dow and the S&P. This is kind of the first step here. It's got to get through this decision point level. You've got 3,000 above that, breaches that, and then it'll probably be more in sync with the Dow and the S&P, which have gone beyond, well beyond their prior swing high wave 5 levels there. So we're in that area of resistance, so we could see corrections in the NQ here, or if they do close above this area and whatever the high ends up, if they get a close above it this week, they can take the high out the following week or at some point after that. Then we should see the next level, you know, 3,000, and then you know, beyond that we'll see. All right, let's look at gold. First of all, in the I did some analysis here. I'll clear that off for a second. Expand this. This happens to be the daily chart of gold. So we did get a heads up with there was a sell signal back here on gold. Just the pattern there was this ABC pattern. The trend at the time of the weekly was still showing up, didn't turn until back here, but you can see that was a nice healthy target on that, 8 times your initial risk. But anyway, so there was a little heads up there that we may get a sell-off there in gold. Of course, it was much bigger than anticipated. But the thing to note here now is we've rallied here in gold on the daily chart, and we'll look at this as well in silver. If I put the Elliott waves on here, you see it's rallied into a wave 4 here. I've got some selling coming in, or red seller's candle closed the week there, or red seller's bar there. Obviously the trend is still down, no strength on the trend though. But we can project wave 5 down here using our tools ahead of time. Let's go wave 5 down here. Just need to make a few clicks on the chart here to do the projection. So here's our wave 5 targets here. Minimum and typical wave 5. Back down just above 1300 anyway is the minimum target. Alright, so we'll see. Let's just look at the weekly chart here, because there's a couple scenarios here. This could hold as resistance and we get you know, that last leg down here before we get a correction back to wave 4 again. But if we look at the weekly chart, of course we had the sell signal on the weekly chart there. We've gone down the typical wave 3 on the weekly chart. Let's project up wave 4 on this one, because this one, let's go up wave 4. Alright, this wave 4, and let me just clear this one off. This wave 4, alright, will be back, it would take us back inside the, you know, this, let's look at these. Let's just go back here. will take us back above that, the bottom of that, what was a descending triangle basically. Would take us back into that area around 1600. Right, but now on the weekly chart you see that strength on the STF is to the downside. It's into that gray band at the downside. So that's why we're watching that daily chart, because the daily is in wave 4 and we could see another leg down right from this area. So either they're going to take it down from here, or we're probably going to work our way back into this potential weight. Maybe not get into 1600. Maybe we retest. That's the next thing. Is this here area here, which was prior demand and now supply. And so as they break below that triangle, they may retest the bottom or base of that and then roll over again. We'll see. So the wave 4, in other words, might be a little more shallow than the actual $1,600 level in gold, but it can still be a wave 4 and then head wave 5 down here. Again, STF showing strength to the downside. So any rally here may end up rolling over. We shall see. All right, and basically the same thing. We look at the weekly silver chart here. Well, actually, let's look at the daily chart here first. It's going to be the same basic analysis. It's already on here. So you see the silver has hit the daily wave 4 resistance area. We had a red seller's candle come in there telling us that the sellers were overcoming the buyers in that resistance area, and we can project wave 5 down here. Just going to go down wave 5. Oh, I must have selected the wrong wave 5 down. I think this was the top of 1, 2, 3, 4, 5. Okay. So there's the minimum wave 5 target. Again, still the minimum wave 5 target will come in still above that $20 level, around 21 and change. So we'll see. It's either going to go down here, make a bottom, and then before we get a correction back to this, what would be the wave 4 DP, or like we talked about in gold on the weekly chart of silver, maybe if we look at this leg on the weekly, is a potential or a wave 3 heading into a potential wave 4. We're at the extended what is that, the maximum wave 3 target, right around there. Let's just project up wave 4 here just to see where that comes in. I didn't get that on right, did I? Up wave 4. 1, 2. There. Okay, so up wave 4. The bottom of that area, right around 2660, 2670. Or if we come into wave 4 there on the weekly chart, again, that would kind of be a test of that. Yeah, let's just draw this. There. Okay, that'll be a test really back of the bottom of, again, this was that descending triangle. Okay. Again, we talked about these descending triangles. They tend to break to the downside, not always, but after a break, then we might get a retest of this area and then a rollover. So we might get to see that wave 4 and then a rollover into wave 5 to the downside, and then we'll see what things look like if we go wave 5 down, because then we're anticipating we should get a rally at that point. All right, so I think we've gone far enough. Well, I'm just going to take a look at the the euro has a sell signal there on the daily chart. You see where the target is down there on 26.74. And then lastly on the weekly chart, since we haven't looked at this one in a little while, that is also short. With that target down 1833. And so we'll see how that plays out. Again, if your clients that are short this can move this stop to break even at this point, as we've achieved the 100% initial risk line. All right, so we'll leave it there, and we'll pick back up and see how things go this week, and we'll do it all again next week.